Hey, my name is Crystal, a CPA at LYFE Accounting, where we help you to save on taxes and build your wealth. Today, I want to help you do just that by going over what is gift tax and gift tax rules. Obviously, people are exchanging gifts a lot more now, especially because of the holidays. And the main question here is, does someone have to pay tax on cash gifts? Whether you're the person giving the cash gift or the person receiving a cash gift, who exactly has to pay tax, if any, on that gift? And the answers to these questions really depend on the annual gift limits and the lifetime gift limits, which, depending on your situation, may require you to file a specific tax form and pay taxes on your gifts. All of which and more I'll be going over in this video, so be sure to stick around until the end because I'll also be going over an advanced gifting tax strategy if you are planning on gifting your children or someone else a large amount of cash, whether that be for a business or a wedding or a house, etc. And be sure to like and subscribe if you don't want to miss out on more ways to save and make money. All right, to begin, let's start with the annual gift exclusion. For tax year 2021, this is $15,000, and for tax year 2022, this is up to $16,000. What this means is that you are able to give someone up to $16,000 in tax year 2022, and it is not considered a taxable event for either party, the giver or the recipient. And if you are married, you and your spouse are able to give $16,000 each to the same individual. And again, there is no taxable event to either party involved. That's because the annual gift exclusion applies to each individual giver, regardless if they're married or not. So you can give $16,000 to an individual, and so can your spouse without any tax consequences. So if you have adult children that you want to give money to, you and your spouse can safely do so up to $32,000 to each child. Now, you may be wondering about the recipient. If someone gives you $16,000 and another person gives you $16,000, those gifts are not taxable to you. In the matter of the taxation of gifts, only the giver is at risk of taxation. The receiver does not have to pay taxes regardless of the amount. Now, let's say you give a friend $25,000 in tax year 2022. Well, $25,000 is above the annual gift exclusion of $16,000. It's $9,000 over, to be exact. You might be thinking, boom, this is where I get hit with gift tax. But hold on, not really. For the majority of people, you can gift over the annual gift exclusion and not pay gift tax on it. And that's because of the lifetime estate and gift exemption. Basically, this means the IRS allows individuals to give up to a certain amount without any federal taxes being due. And the amounts are pretty high. In 2022, a taxpayer can give someone up to $12.06 million without any taxes being due. And this amount doubles for married couples. So for example, you can give your child $11 million and no gift tax would be due, not by you or your child. And that is because it is below the lifetime estate and gift exemption. The same is true when you die. If your heirs inherit under the lifetime estate and gift exemption, no federal taxes are due. So now you might be wondering, well, what's the point of the annual gift exclusion of $16,000? And if you even need to do anything differently with your taxes if you do give over the annual gift exclusion and keep it under the lifetime gift exclusion. The annual gift exclusion is still relevant because it is the amount that does not count against your lifetime gift exclusion. Meaning, if you give someone $30,000, only $14,000 will count towards your lifetime gift exclusion threshold. That's because with the annual exclusion, you are allowed to give someone up to $16,000 without consequences. If you did give someone $30,000 or any amount above the annual limit, you would have to report that gift on IRS Form 709. This form does not calculate any taxes due, but is just the IRS's way of keeping track of your gifts above the annual limit and subtracting them from your lifetime gift exclusion. So continuing with our prior example here, if you give someone $30,000 every year for 10 years and the annual gift exclusion is consistently $16,000, that means you gave $14,000 above the annual limit for 10 years for a total of $140,000. $140,000 would then be deducted from your lifetime gift exemption, and you would only now have $11,920,000 left for your lifetime gift exclusion. Again, with this in mind, most people don't really even have to give this more consideration. But even if you don't plan on giving away millions of dollars in your lifetime, you are still required to file Form 709 with your annual tax return if you do give a gift over the annual gift limit. But now let's consider if you are planning to pass down a multi-million-dollar estate to your heirs and don't want your annual gifts to impact your lifetime estate and gift exemption. There is an advanced strategy you could consider. To illustrate this, let's consider an example. Perhaps you want to give your son $100,000 to help with a down payment for a house. What you could do is loan him $100,000. So draw up a loan agreement or promissory note for the amount. And every year you could gift him up to the annual exclusion or $16,000 and reduce the outstanding balance on the loan. So year after year, the loan gets reduced by $16,000 from the annual gift you give him until the loan is basically paid off. In this way, you would not be required to file Form 709 to report the gift or loan of $100,000 to your son, because it was actually a loan to begin with, and you simply gifted him $16,000 per year to pay off the loan. And as we know, this amount does not need to be reported on Form 709 and would not reduce your lifetime estate and gift exemption. Simple, right? Now, there are a few more considerations with gift tax rules. One, the annual gift exclusion tends to go up a little every year, or can even be reduced, so make sure you are aware of the limits. The same is true for the lifetime estate and gift exclusion. Two, the limits mentioned in this video relate to the federal limits, but every state has its own limit. So even if you're under the federal limit, you may be above your state's limit, which may require you to pay state taxes on certain gifts. Three, you can give as much as you want to a nonprofit organization or 501c3 organizations, though there are limits as to how much you can take as a deduction. That's all I have for this video. As always, let me know down below if you have any questions or thoughts, and I'll see you in another video.